Hello traders! This week's video comes to you from theclosingprint.com, December the 15th, 2024. In this episode, we'll discuss the puzzling yield reversion and the speculated Fed rate cut. With markets in a confirmed uptrend, New York Stock Exchange, small caps, Russell, and the Dow Industrials have seen breadth deteriorate, with only tech and consumer discretionary strong into the holidays. This leaves us with 12 bearish indicators, 3 neutral, and 5 bullish for the week ahead. The big question is, will the Santa rally appear soon, or will the Fed disappoint? The S&P 500 remains in a confirmed uptrend. Even though we took a pause last week, we remain above the 10 EMA and the 6,000 level, which leaves us with only consumer discretionary and tech leading the markets above its 21 EMA. We desperately need the value stocks to rotate in if we're going to get any sort of rally into year end. As these sectors are not showing any sort of strength, fading for the last 10 trading days. That also goes for the small caps. IWM has been fading for 10 days as well, headed to the 50-day, a likely area of support with RSI down below 50. In addition to the Dow Industrials, only 30 stocks, but still fading for the past week and a half. Headed to the 50-day moving average, still in a bullish trend, despite the lack of participation. Finally, as I like to say, when in doubt, you always want to check the New York Stock Exchange Composite, 2,000 stocks, back to the 50-day moving average and slightly below on Friday. This index needs to bounce, and we need to see more value stocks in the banks, industrials, healthcare, and energy sectors participate if we're going to see any follow-through into year end. The puzzling thing about the current trajectory in the indices, especially the S&P 500, is the expectation that the Fed will cut rates this week. You can see that bond yields have reverted. That's suggesting a normalization and a Fed rate cut, which currently sits at 96% probability, with a 4% probability of the Fed doing nothing this week. With yields moving higher, TLT and bonds collectively moved lower, with HEG, the Barclays Aggregate Bond Fund, also pulling back. In addition to investment grade corporate bonds, if that wasn't enough, we also had the US dollar moving higher, while the Japanese yen, Australian dollar carry trade faded. So what does this all mean? It means that we have so many mixed signals, it bears a cautious condition and the reasons we've been talking about reducing risk over the last week. We also see commodities modulating, mostly in a range-bound condition. Copper indicating some ambivalence in the construction sector, which we talked about last week briefly, with D.R. Horton continuing a move lower as inventory becomes an issue and homebuyer assistance from the company to reduce some of their overbuilt inventory at the present time. All of these mixed indicators suggesting you should be cautious in the short term, in addition to what we're seeing in oil and gas. In a range, but moving back above its 50-day moving average. Probably won't move much in the next few weeks, but it's something to consider that we have all of these mixed signals as we head into a Fed rate decision, with commodities reflecting the same condition. This is the Deutsche Bank Commodity Index Tracking Fund, flat along its 50-day and 200-day moving averages. Overall, these indicators suggest that we should be cautious, despite the fact that the S&P is at a confirmed uptrend, Breath is deteriorating. That needs to change. And we need to see how the markets react to a Fed rate cut this week. Overall, most sectors are weak and moving lower, with the exception of tech and consumer discretionary. So we need to see these sectors bounce if we're to hope for any kind of rally into year end. The stocks listed below are from the IBD 50. Most of them look like they could follow through. Many are at all-time highs. In addition to stocks that IBD indicates institutions have been accumulating in the second line, Apple, Costco, Google, Netflix, Team Atlassian, Taiwan Semi, VRT, and Walmart. Still, it's these 12 bearish indicators that have my attention, something I'll be watching for to start trading on Monday. Affirm Holdings showing some strength, RSI above 50, had a bullish cross in the 20 and 50 day back in late August, early September. Price action continued to move higher. We've since consolidated for the past 2 to 3 weeks, looking for a breakout in Affirm Holdings. Argenx trending above the 20 and 50 day moving averages, RSI above 50. Astera Labs has been bullish since September as well, with a crossover towards the end of the month. 20-50 day is bullish, RSI showing muscle. MACD and stochastics are bullish. Volume indicates institutions have been picking up shares into the recent highs. Look for a follow-through. If we see any dip and that gets bought, for a better entry. Axon Enterprises, RSI is still above 50, consolidating for the past week from recent highs. What I'm watching is stochastics resetting. Just keep an eye on MACD. That'll move as a function of price as price action continues to consolidate at the 640 level. Blue Owl and some of the asset managers have seen strength like KKR. We had a nice bullish cross in late September. 20-50 day is rising. The stock is bullish. RSI is above 50. Looking for these asset managers like Blue Owl to continue into year end. Hopefully financials will participate. That will help breadth improve, and we can see that Santa Claus rally that everyone's looking for. Broadcom had earnings. Interesting that institutions are accumulating shares despite the big gap up. Watch for any kind of indication that there's going to be no weakness and that we'll see a continuation of this gap and go. RSI is above 70. And volume was off the charts with MACD and stochastics bullish as we look for more follow-through. CLS sort of consolidated above the 20-day for the past few weeks, then broke out on Friday. Look for this one to continue higher. Electrical components and technology. Volume was well above average on Friday. MACD and stochastics rising. Look for CLS, Celestica, to continue this week. Decker's Outdoors continues with this cup and handle pattern. Cup and handles, measured move, take the range from the high to the low. That gives you your measured move. This stock looks like it's going to continue higher. The 20 and 50 day crossed over in late August and continues to trend in a bullish direction with MACD and stochastics bullish as well. Dave Inc. This one looks pretty interesting. Consolidating for the last 4 to 5 weeks. Looking for a follow-through. RSI rising. MACD needs to turn. You can see histogram is starting to change direction and stochastics is rising. Watch the volume on this one. On an above average volume day, this one could break out above that 103, 104 level in the short term. Gene DX been consolidating in a very tight range for the past few weeks. Since the end of October, stock hasn't moved much. The 20 and the 50 day are flat. Look for them to turn back up or for a price to bounce off of this area in the short term as RSI is back above 50. Consumer discretionary stocks, in addition to tech, were very strong over the last few weeks. We can see that in Globe E Online, a consumer discretionary specialty retailer. Price action looks like it's going to continue higher. Look at the muscle in RSI. That's telling you the strength of a trend. That shows you that the strength of trend is persistent and most likely will continue. Stochastics rising, volume showing institutions have been picking up shares since the gap up. Looking for a double in this one from the 40 level. We're looking for Lemonade to bounce. RSI at 50, turning back up. Price action stalling at 40. Can we see a bounce and a follow through? 2050 crossed over in late October into November. It's only been 6 weeks. Maybe we see a follow through in the short term. Netflix, according to IBD, has seen accumulation, institutions picking up shares over the last 3 to 4 months. We moved above the 20-50 day back in August and continue this trend. Look for a little dip back to the 900 level perhaps for an entry if we get a bounce. In addition to the strength that we're seeing in Palantir. A little dip last week on Wednesday got bought up. RSI rising. Trend is impeccable since May. Since June, the 20-50 day crossed over. Those two continue to move higher. Look for dips to buy like we saw on Wednesday. I wouldn't chase this one. Intraday, you might get a scalp or an entry that follows through. For now, RSI is rising back above 70, indicating persistent strength in this bullish trend. Robinhood did the same thing. 20-50 day cross back in September. Price action came back to the 20-day. On Thursday, buyers stepped up. Look for a follow-through in this relatively inexpensive broker-dealer for a year-end rally. Rocket Labs also consolidating for the past 2 weeks. Note RSI pulled back and now is starting to turn up in addition to price. We could see a nice bounce in these space-related companies, competitors to SpaceX. Look for MACD to turn as a function of price. Volume is picking up, so that's showing you that institutions over the last 3 weeks have been picking up shares. Looking for this trend in the 20-50 day to continue. Watch Royal Caribbean and travel and leisure related names, airlines, cruise lines, hotels, and casinos. Potential for follow through. If we get a bounce in Royal Caribbean, 20-50 day cross back in September, so it's only been 3.5 months as we look for continuation. ServiceNow trending, feels a little bit overdone. SoFi on the watch list last week, looking for a follow through here after a 3-week consolidation with the 20-50 day rising and RSI turning higher. Taiwan Semiconductor was mentioned as a buy on Friday last week by IBD. We'll look for a follow through. Note the 20 and 50 day are together. This one's on my short list of stocks I might want to trade this week. From the list of stocks, institutions are accumulating Google, nice pop last week on announcement of a new AI-related chip. American Express, financials, trending, looking for a push off the 20-day moving average. RSI is still rising. Additional asset managers, Apollo Global, looking for a follow-through. 20-50 day cross back in September continues to rise with RSI above 50. Ep1215 consolidating. All of these stocks being accumulated by institutions makes sense with Apple running, breaking out of an ascending triangle pattern. Looking for a follow-through to the 260s, 270s with Apple. Make sure you check Money Magic levels for support and resistance. Team Atlassian being picked up by accumulations. Looking for a follow-through. 20-50 day cross back in September. This one continues. And RSI is rising. Broadcom, again, on the IBD 50 and also on the stocks that institutions are accumulating. Look for a follow-through on the gap and go or consolidation for a better entry. Costco, we had a 20-50 day touch and price action pushed off of it back in November. We've got price action also testing the 20-day on Friday. Watch this one. We could have a nice setup going into year end. KKR, another specialty finance asset manager with a crossover back in May. This seems a bit extended, could consolidate a little bit, but if we're going to get any sort of follow through in the markets, we need financials, industrials, healthcare, and consumer staples, in addition to energy, improve. So these financial stocks like KKR could show some strength. This is something that we're watching for into year end and into the first quarter. Meta also being accumulated by institutions. Watch for a better entry, consolidating after a recent run-up over the last couple of weeks. Salesforce at highs, 20-50-day bullish, RSI above 50. Shopify consolidating, bullish 20-50-day moving average, RSI above 50. Look for a consolidation, maybe a bounce and a follow-through if we get some sort of improvement in breadth. If the markets run after a potential Fed rate cut. Finally, we got Walmart accumulating shares. Institutions have been buying Walmart since late April, early May. 20-50-day moving higher. Price action a little bit elevated from the 20-day, but could see a follow-through this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. It is Sunday, the 15th of December, with only 10 days to go before the holiday. Shortened weeks ahead, so be on your toes. Start with a bit of caution on Monday. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast. Be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend. Take care, and we'll see you in the morning. Ciao.